Success in investing actually entails knowledge acquisition. We need to have a broader knowledge of investment and psychology, investor psychology, as well as behavioral science, because we tend to discover that when it comes to investing, investors are somewhat controlled by sentiments like fear, greed, you know, going into panic mode, fear of missing out, FOMO, instead of reason or logic. So investors are not all that rational when it comes to their decision making. So for you to be able to excel in investing, it's very important you have a substantial grasp of the knowledge of psychology. It's very important. Behavioral science is very, very important. And so we want to look at the power of sentiments or sentiment indicators in stock investing. I told us earlier that sentiment play a very important role in stock movements. And so for you to be able to invest, adequately, to have results that that are quite encouraging, you need to have an in-depth knowledge of investor sentiments. So in this case, you measure these sentiments by what is called, sentiment indicators. So it's very important you have a knowledge of sentiment indicators. Please subscribe to this channel and like this video, as well as drop a comment in the comment section. And sentiment indicators measure the overall mood of the market or specific assets. And by so doing, helping investors, gauge whether market participants, that's whether investors are generally optimistic, bullish, or whether they are, basically pessimistic or bearish. So there's that particular dominance, at a point in time of either the bullish markets or the bearish markets, bullish sentiment and bearish sentiment in the markets. These are two key characteristics of investors' response to the overall market or economic conditions. Number one is investor sentiment survey. Investor sentiment survey. So in this case, there's this survey that tracks individual investors' outlook, whether it is bullish, whether it is bearish, or whether it is neutral. So this survey helps you to indicate whether the market is bullish, or whether investors are neutral, or whether investors are bearish, in their sentiments. This exposure index we need to be familiar with. This exposure index reflects active managers' equity exposure to assets to assess, professional sentiment. So in this case, it tells you precisely the behavior of, professional investors, fund managers, asset managers. How do they behave? What is their sentiment at a particular point in time? It's very important you have an idea of how professional managers are behaving. Are they bearish? Are they bullish? Are they neutral? That will go a long way in helping you to gauge the pulse of the market, so to say. Number two is the put-call ratio. The put-call ratio. So it compares the volume of put options, that's bearish versus call options, which is bullish. And so a higher ratio signals bearish sentiments, whereas a lower ratio indicates bullish sentiments. So usually you put the call all over the put all over the call ratio. If the result is higher, it indicates a bearish sentiment. If the result is lower, it indicates a bullish sentiment. Another key indicator is the volatility index, known as the VIX. The volatility index, it is called the VIX, and it's also known as the fear index. It measures expected market volatility, and so a high VIX suggests fear and uncertainty. That's a kind of bearish sentiment, while a low, VIX, suggests stability or optimism. That's a kind of, bullish sentiment. Not only that, there's number 4 is the bullish percent index, the bullish breadth, the bullish percent index. So it measures the percentage of stocks in an index with bullish trends. And so above 50 is considered bullish, and below 50 is bearish. You simply pick an index, and then you look at the percentage of stocks that are displaying bullish tendency, that are rising in price. If it is up to 50%, if it's above 50%, the market is considered bullish. If the number of stocks that are going down are above 50%, then it is considered a bearish market. Not only that, number 5 is a market breadth indicator. Market breadth indicator. So in this case, you have the advanced, decline line. The advanced, decline line. It tracks advancing versus declining stocks to gauge market sentiment. That is, what number of stocks are advancing in price and what number of stocks are declining in price. So this particular, indicator will give you, tell you whether the market is essentially, bullish or bearish. Like in the market, like in the Nigerian market, we have about 100 and something stocks, and so if, let's say, maybe about 100 stocks are on an upward trend and the remaining are in a downward trend, that's a typical, a bull market. If only 50 out of the 100 plus are rising in price and the remaining ones are going down, that's a typical, bearish market. So you have the new highs and the new lows, it's a kind of indicator you need to understand. It compares stocks hitting new highs and those hitting new lows. More new highs signal bullish markets, and more new lows indicates a bearish trend. Number 6 is consumer confidence index. Consumer confidence index. So in this case, it measures consumer sentiments. So high confidence is often linked to bullish market sentiments, while low confidence can indicate bearish, bearish nature of the market or bearishness. And so the consumers, play an important part in determining whether the market will go up or whether the market will come down. So consumer sentiments are very, very important. Number 7 is a sentiment analysis of financial news and social media. Sentiment analysis of financial news and social media. So in this case, this particular, natural language processing, to analyze sentiments, in financial news and social media, helping identify positive or negative sentiments. You analyze how investors react to market news. Whenever a particular news item pops, in the news space, how do investors react to it? And so their reaction will tell you whether the market is bullish or whether the market is bearish. Number 8 is relative strength index. Relative strength index. So in this context, it's a typical technical indicator that shows whether a stock is overbought, that's bullish sentiment, or oversold, that's a bearish sentiment. If you look at a typical investment app, and you go to the buy sell section of the app, in the case where you have more buyers than sellers, that stock is kind of the stock is overbought. There's a bullish sentiment attached to the stock. In the case where you have more sellers than buyers, the stock is oversold. So that particular stock is experiencing, a kind of bearish condition. All right. And so in the case where the relative strength index is above 70, it signals an overbought situation. So when if it is below 30, it indicates, a kind of oversold condition. As an investor, you need to be very knowledgeable, on how this index, all right, these sentiment indicators influence the markets. So the more knowledgeable you are about them, the more you have chances of success in the markets. I want to thank you very much for watching. Please keep on accessing other videos in my channel as well.